Hello guys, welcome to Mali Traders. If you're new here, please, after watching this video, like, subscribe, and follow us on Twitter, and come to our Discord where you can learn about everything I'm going to show you on this video. Okay, all right, so let's start with the dollar index, the Dixie rather. So not that. As you all know, or not you all, those of you that have been here before, these are the pairs that we trade. So today I'm going to start with analyzing the dollar chart. So for quite a while now, we've seen never stop or a really parabolic run on the dollar. So we went all the way to, what is this, about 115 thereabout, and then we start declining. Not entirely sure where it was going to go, but let's see. We measured from here. We're thinking, okay, how far can this thing go? Where is the premium and where is the discount? Now, this is a macro analysis, okay? So this is not necessarily for your intraday tiny scalps that you're doing. So because of this was where the leg started. And even if you take it from here, even if you take it from this swing low here, you still see that we are in discount zone. So if from a monthly perspective, macro perspective, we were already expecting that, okay, the dollar is probably going to come back into this zone, and this is a very critical area. From this, this is what we call a structural level. Structural. Yes, start from here. So this would be structural support and resistance level, you know, just for argument's sake. So once we break this upward, and we know, okay, if we're coming down, we're gonna go below this place and come into this fair value gap. So this was our draw on liquidity. So let's dive into this area and see what we see. And this is on a monthly time frame, okay? So let's go to the weekly. You know what? Let me go back here. Let me just point out our chart. So this is how we chart. We take our levels in advance. As you can see, our macro bearish draw on liquidity, which is the doll. This is it right here. I'm going to take this off and also take this off and go to a weekly. So this was our draw on liquidity from the dollar. If you've been following ICT or if you've been following Mali Traders, we always talk about how to use the dollar to trade other pairs or other market, okay? The risk on, risk off, flight to quality sort of narrative. So this here was the drawn liquidity for the dollar. Then if you go to the daily time frame, so here was a monthly low. So from the monthly perspective, if you're looking at it here, this was a monthly swing low. Why is it a swing low? We have a shorter candle here, shorter wick rather, and a shorter one, and this was the lowest. Okay, so the lowest wick in between two candles is the swing low. The same for the upside. So on the monthly time frame, it was a swing low. On the weekly time frame, and every time frame basically, because it is the lowest point. And what else do we have in this region that was that made this area strong? So here we can see this little fair value gap here. It's not little, but kind of little if you look at it from here. So we have what do we have? We have a daily fair value gap. We have a weekly swing low, which is also a monthly swing low. We have a daily fair value gap. This, okay. This is a BC. It's a buy side imbalance, sell side inefficiency. So it's coming in here, and then we have a daily bullish breaker. We'll get to that in a while. And at the same time, in this area, we have a round number which was exactly Uh, the round number we're aiming at was hundreds point 800 or so. So we know there was a round number here, and smart money usually plays orders around round numbers. Okay, so now let's go to the daily. I remember we had a some form of a breaker. Yeah, we had this breaker here. So here is the breaker. Okay, so we had a high, we had a low, a high, a lower low, and then we break it. Okay, so this is how a breaker works. We had this low here, and then we had a high, and then a lower low, sweeping this liquidity here, and then it ran off. So this last up close candle there. So this is our breaker right there. And what else do you have there on that breaker? You have the BC I talked about before, fair value gap, buy side, imbalances and inefficiency. Inside this breaker, this is a unicorn entry right there. So and here we have an order block, a daily order block right here. So at this point, we know, firstly, the price has rejected from this area before. So we were only hoping, and not just hoping, we know with a greater certainty that price is going to reject from this zone. Likely take out this low, the swing low, and then reject from here. Even if dollar is going to come lower, we know that at this particular point, at least we are deep discount. So it's going to reject at least for the immediate short term. So we were waiting for this, and then to act, so we can position ourselves. So at this point, we could be buying the dollar. Some of us long the dollar from here. You can do that too. And by the way, just a day ago, a few days ago now, we had this gap, which is also kind of a drawn liquidity, a drawn price. Okay, so that was the dollar. So we know the dollar was going to bounce from this level. So what did we do? For the FX, let's start with the FX pair. Let's just choose a random one. Now we didn't really do much with the yen pair. Let's this couple of days we start with Euro USD. So yes, at the same time, this was our drawn liquidity on a higher time frame. So this was our higher time frame draw on liquidity. So we have a daily order block right here. So this area was our drawn liquidity, and then if you zoom in, you would see that we have a little fair value gap, which is a CB, sell side imbalance, buy side inefficiency. Okay, when you see this, price is supposed to balance it up because price were not efficiently delivered here, buying and selling. So by definition, now I'm quoting ICT. By the way, a lot of the concepts that you hear from here are not originally mine or Mali traders or anybody teaching SMC for that matter. So we are basically rehashing what ICT has taught us. All right. So this was our drawn liquidity. So around here we have this order block, and then we had this. At the same time, as dollar was going into the discount zone that we outlined, or rather that I outlined a few moments ago, this was going to be rejected. So that is how we position ourselves prior to this. But before that, though, as this was happening, what happened here? So we had this on the 4-hour time frame here. We waited for this sell side liquidity to be taken. So let's look a little bit closer here. Let me just take this off. So this was sell side here that needed to be cleared. All right, and if you look closely, this week right here, This tapped right into the consequent encroachment of this week. So how do you get that? You make sure you use this GAN box. And by the way, these are what I call advanced levels. This is a new concept that was taught by ICT recently. So if you don't know how these things work or how to read it, go watch our other videos about taking levels, part 1 and part 2. Part 2 deals more about advanced levels such as this. And then you can just come to the Discord. You see us applying it live, and you see us talking about it all the time. And we do a free mentorship for beginners over there. We'll go over that in a moment. So right here we can see, I think I already, let me see if I already have it there somewhere. All right, no, I don't. So here, so this area was our drawn liquidity, and to prepare ourselves, we identified our area of liquidity, that is liquidity pool, resting below. So I'm just gonna call this I just call it like that, liquidity grab. So we're looking for this liquidity grab on the sell side. So if this should happen, or if it's going to happen, then where is price likely to reject from? So this was our immediate short-term, or rather, short-term drop on liquidity. Do you understand what I just said there? Before price goes up, or before any movement, any significant move, any move rather, most of the time price will do the opposite thing. So you can see this as a little power of theory playing out here. I like to see it like that: accumulation, manipulation, and distribution. Okay, the same thing here: accumulation, manipulation, distribution. So once you know these terms, once you know how they work, you will find it in all time frames. It's kind of fractal in that way. All right, so let's go to the 1 hour time frame. So you see exactly what I mean. This was the 4-hour consequent encroachment of that week. So price meandered a little bit here and then dove down into this and then went up. All right, so there was a high here that was pushed, making you think that we're going lower. You see what it did? It pushed this, it took out this buy side and then dumped down. You say, okay, buy side is taken. All right, okay, we're definitely going low. You short. Well, depending on where you short, you could have easily be taken out here. All right, so now you wrecked. Why? Is it mean that you're a bad trader? Maybe, maybe not. I don't know. But if you were not anticipating this higher time frame drawn liquidity, you would have positioned yourself badly, especially if you haven't been paying attention to the trend. All right, so your buyers should have placed you up here, targets. Okay, so that is how we traded into this higher time frame draw liquidity and then traded it down. So this was a first trade up, second trade down, and then there was something some other people were scalping this as I was done trading for the day. So this is what happened. And if you go here, so you can find your entry here. So I'm not going to go deeper into that. I just wanted to show you how we play this and how we use a higher time frame, draw on liquidity, and a bias, intraday bias, which was initially how is this daily candle going to close, or rather, yeah. So if the daily candle opens, or when it opens, how do I expect it to close? Bullishly or bearishly? So we anticipated that this day is going to be bullish. We're going to go here because the dollar, at the same time, we were hoping that the dollar, this was the draw, so nothing was certain as long as this target hasn't been met. So we were hoping that our bias was on this day, which was Thursday, our bias was that this is going to be a bearish close. You know what? In other words, a down close day. And if this is going to be a down close day, 95% of the time, I think this is going to be an up close day because they do the opposite of each other. All right. So at the same time, on Friday, we also anticipated that once the dollar comes in here on this day, Friday 14th, it's likely going to 95% again to be an up close day. So we knew that this is going to be a down close day. See how we use the intermarket or these pairs and how they trade against each other, flight to quality and risk on, risk off, those sort of principles to trade. So you just replicate the whole thing in most of these USD pairs. So that's how we did that. And what should we check next? Yeah, and then when it came here, and then with some of my crew took another scalp using this place as a support, to say the least. All right. So what else did we trade? Yeah, we traded a lot. It was a killer weekend. Sorry, it was a killer week. So gold, yeah, on the daily time frame, the main thing we had because metals were equally bouncing, like we'd be going higher, like really. The main thing we had here was this rejection block right here on the daily. This was our drawn liquidity. So it wasn't that much to go after. Of course, we had a lot of other things in between, but this was our major drawn liquidity, and we were using the Dixie as a form of a parameter, so to speak, like a compass, kind of a seer, where using that to anticipate what is going to happen to everything else. Again, going back to risk on, risk off, and flight to quality sort of thing. Money moving from the gold, from all these metals and all these other pairs into the dollar, and vice versa. All right. So we took this all the way down here as the dollar was rejecting from. Again, as the dollar was rejecting from here, we were selling gold from the rejection block that I just mentioned. Okay. So if you just say I've corrected, yeah, this was the rejection block. This was the draw on liquidity. Although the price didn't touch it, it is called drawn liquidity for a reason. Price does not have to tap into it, exactly into it. It is drawing to it, especially when it's a rejection block like that. And we were watching it on a lower time frame to know what we're gonna do, and then we took it down, especially when the CE of this day was our draw on liquidity in case the rejection block didn't get tagged. So that was how it was done. And taking levels again. Now all our pairs, the levels has been updated and corrected against next week trading. So as you can see, we have taken the new levels for all the pairs, mark out our ideal liquidity and imbalances and all that good stuff. So this is what we do in the weekends to position ourselves for next week trading starting on Sunday. And so let's go to the ES and see what happened. We love futures. So here, where do we start? Let's just say let's go to 15 minutes time frame initially. Now hold on a second. Yeah, let's go to the 15-minute, the trades that we took before I go over other things. So as this was happening, I notified, if you go to my Discord, you will see that we notified the crew, to the members there. We say, okay, there is a potential power of 30 playing out. And this was the exact picture that was shared afterwards. But as this was happening right here. I think the price was around here. We say, okay, price is going to come here, news and all the other good stuff that is happening on a daily basis, that there is a potential power of 3 playing out, meaning buy side is going to be tagged and position yourself to the downside. We do not tell people buy here, sell here. We don't do that. But we tell you what to look for, and we teach you how to look for these things on our Discord. Everything is for free. Stop paying for signals. You get these things for free right on our Mali Discord. Okay, so click on the description below or check the description below, and then you find all the information there. Follow us on Twitter and come to our Discord. You see how this thing works. It works like magic, I'm telling you. All right, so this was the first trade, or one of the trades rather. Okay, so we shorted let me take this off in a second. How did that was Friday? Yeah, so when this was happening here, after this power of 3 played out, and then this 15 minutes, 5 minutes, call it what you want to call it. It can be 15 minutes. I says here 15 minutes breaker, but if you check it out, so it's a higher high, and then a break, and then yeah, last do damn close candle. So on the 5 minutes and the 15 minutes, you can see in the 15 minutes you put it there, then you got yourself a breaker. If you're on the 5 minutes, you put it there. It doesn't matter. So you can find this if you know how to use it, and then you know what to do. So here we didn't really get a unicorn because candles overlap, or rather wicks and candles overlap, no space in between. So here though, here we got an SMT with I think it was one of the pairs. I think it was Nasdaq or so. This is where we enter. We took a short from here, right here. Okay, so we took it all the way down to this place. Here there was an SMT divergence. So what do we have here? Let's go to the 1 hour time frame. On the 1 hour time frame, so this was the setup that we posted. This was this power of 3 was the setup we posted. So we shorted from this 15 minutes breaker down into this 1 hour, 1 hour fair value gap, BC, right here. So we shorted into this and then long from here. So all the way here, 2 trades, actually 3, somewhere in here. Okay, down here was the SMT, or also with Nasdaq. We'll check that in a while. So again, this is something you really have to learn to do, which is the gap, the new week opening gap and the new day opening gap. ICT has talked about it many times. So here, see what happened right here. This was where we you see. Okay, just gonna change the color. No, I'm just gonna just take note of it. Just close it so you can see right here, right in here. It tapped into our gap indicator right here. I mean, you can fake this thing right there. And then as the price was coming in there, we had a Nasdaq Let me show you. I think it was NASDAQ. I can't really remember, but let's go to 5 minutes time frame. So this is what happened. We got ourselves a lower low and we got ourselves a higher low. So this allowed us to long all the way from here, took it all the way back, and then from here to here there was this retracement. And what do you get over here? OT, another long. So you take your first profit here and then you compound it. That is why, remember I said it was 3 trades. This one down, this one up, is 2, and then take profit, and then this was the third one within a very short period. So you're taking 3 trades, and you can do this all with all the other pairs because they sort of trade in a similar fashion. They trade the same way on the other 3. These 4, actually these first 3, ES, NQ, and Y. So this was a really good trade. Now, how did we get here? We didn't get here by accident. All right, this is hard work, many months of practice, and taking in what ICT has been teaching. Okay, so let's see what we did with NASDAQ. If we open this, you can see at the same time it was touching this. We don't use this gap indicator all the time on NASDAQ because we just trade this pairs based off of ES. But we have also noticed that once you have these indicators on, I don't know, somehow it's kind of, I don't want to say magic because I don't really believe in those stuff. But yeah, it's kind of crazy how accurate these things are. So if you don't have a copy of this, not a lot of people do. Draw it by hand. Actually, you know what, you don't need to buy it, you don't need to do anything. Just, if you don't know what these new week opening gaps and new day opening gaps are, go watch ICT video, or you come to our Discord, we talk about it and we teach it. Okay, draw it out by hand. If you don't have this indicator, if you want this indicator, come to the Discord, be a member of the Discord, and then we talk about how you can have a copy so you can just plot it. All right, don't be lazy. We plotted, we were drawing this out manually, and then because we trade a lot of pairs, and so we just, hey, why not automate it? I mean, why not? Sure, do what you want. So this is how we long the NASDAQ from this point. And another thing is, if we go to, this is the extra zones for NASDAQ. No, not that. I'm just gonna take this off. Let's go to 15 minutes time frame. So here, now first let's go to the daily. See, this is why I talk about being able to take your levels. Taking your levels is very, very important, and knowing what where your levels are. All right, this is the bedrock of everything. I cannot stress this enough. There's not a lot of YouTubers out there that is talking about this or that is trying to teach exactly how to do this accurately, but it is the foundation. Without this, I don't know about you. If you have a working model, fine. But without these things, without knowing how to take it and when I can rely on it, I'm lost. My entire crew, we're lost. So this was initial fair value gap. Right here, this is the box, initial fair value gap box. In here, you see the first time we traded into it, and then we came back into it again, take out these lows, the sell side, and then off we go. All right. So if you go to the 4 hour, you see how we be tapping into it. And then when this happened, this candle didn't take out this candle. So we knew right already then that there's liquidity inside this box. We were just waiting for that liquidity to be pushed. All right. So there was a 4 hour order block right here, and liquidity right here. So, and if price is gonna go higher to tag this level, then it's gonna need a 4, right? So it took out this sell side liquidity, and then off take out this buy side liquidity to go down. So here, what do we have here? If you look closely, all right, because I will be taking new levels, and this is kind of overlapping, so I'm just gonna move this out of the way. move this weekly out of the way. So you see this order consequent encroachment on the daily. So let's go to the daily. So right here you can see this is a daily CE right here, respected, and then again it is called OD because it is an old daily consequent encroachment level. All right, if that sounds a little bit too worded or long worded, sorry about that. Okay, but just watch the first and second video of the levels taken and you understand what I mean. So now we just wanted to see this liquidity push and then we shorted that shit all the way down. All right, so that is how we play that long short, and yeah, and then from here, just gonna no, just gonna leave that. From here, right here, I think it was this. Yeah, this was the opening candle for this day. So we long this place. Here is ta-da, what do you see? Right into our gap. So it has other confluences in here that allowed us to take a trade from this place. So because of time, I can't go over everything that we did. There is no time for that. But this is exactly how we trade, guys. Okay, using ICT consequent encroachment, or rather ICT advanced levels, with our gap indicator and and session indicator. Okay, so we combine these things to look for trade, and then we know what to do. So you see, this was the accumulation I talked about. There is an accumulation in Asia. Asia session is always, I don't want to say always, but most of the time, the accumulation. And then London can have manipulation and distribution in New York. So yeah, this is what you see. So okay, guys, I'm going to wrap it up now. I just wanted to show you how we trade. Now, if you knew, we break down. Listen, guys. Okay, let me just explain something to you before saying goodbye. We break down ICT's concept in bite-sized pieces. If you go to ICT's video, this is where you're gonna learn most of the things. Actually, everything. I don't know everything, whatever, but go to his video and then you see everything there. However, it is convoluting and could be complicated for most people. So, and this is where we come in. And the difference between us and a lot of other Discord or Telegram or a lot of all these other groups is there is usually no passionate and personal engagement on individual level with all these other places. Okay, we're not doing what we're doing to get crowd. We're doing it because we actually care. I mean, you can say we trade these levels every day. We trade this market. We have mastered this market. This is what we concentrate on. All right, and then we look at a lot of other things. We look at the futures currency, and then we take levels on these things, just so you know, so we know how to position ourselves. Okay, um, yeah, come check it out. All right, guys, thanks for your time, and please like, subscribe, and share this video, and let the world knows. Let the world knows. I can't even speak anymore. All right, guys, thanks. Bye.